is for me, I start taking my direction in D1, then I move to H4 and H1. Those are the only time frames I check direction with. Right. So for someone who is completely a newbie, it's always important for you to know your candlesticks. Before anything in Forex, know candlesticks. After maybe you have known what Forex trading is, know your candlesticks because they're going to play a very crucial role and a crucial part in your trading. So after that, we have to master direction, which for me I look for in D1, H4, and H1. That's how I'm able to catch trades at sniper entries, and at the same time, I can hold them for a day or two. I can give a signal today and then come tomorrow and tell you that we have now taken profit or something like that. And then someone will be like, oh, but this was a sniper entry. Why did you exit? It's because when you know your direction, you get confidence. All right, so what's the other thing? The other thing is knowing how to work with that direction. This is where it all starts to align, or where we start putting sense and support our point of knowing what direction is. So I'll share my screen here. Right. So I've fed you guys not on what we call market structure. I've fed you a lot of times. Some people will still take it simple, but well, you can revisit those notes on YouTube, those videos on YouTube, and go back again to them. They'll help you a lot. What I want to do is I want to trade with the trend. We have a lot of people who can open a chart and say, but you see, it's selling. Why? Because they are only seeing this part here. They are not seeing all of this here. They are only seeing just this part here is the part that they are seeing. And then they say, oh, my trade is selling. Well, yes, it's selling, but it's buying. What I mean by that is you have ways that you have to treat your direction with. And let me just browse through what we've learned before so that someone maybe gains confidence. The direction, generally, we say we have market structure, right? And on that market structure, it helps me to know whether I'm in an uptrend or whether I'm in a downtrend. Meaning, if I see a high, a low, a high, a low, a high, generally I have been given confidence that I'm in an uptrend. Why? Because I'm having highs and lows, and these highs are being broken, giving out new highs, new lows, and the previous highs are being what? Broken. So what I would want to do is, I don't want to sell, but I actually want to buy. Why? Because I'm making new highs and lows, new highs and lows. Would it make any sense for me to sell? Even though I'm hunting this small movement? No, it wouldn't make any sense. Although sometimes we do, yes, trade retracements, but that's where most of us fail. Because the moment you start trading, saying I'm selling, but I'm overall in a buy, that's when you start messing up your buyers. If you are sticking to a buy on a trade, stick to that buy. So again, I'll repeat, whenever I open a trade, or whenever I open a chart, I mean, not a trade, I always check my direction. Now that I've known that my direction is in an uptrend, we have what you call impulses, right? You leave a high, and corrections, you leave a low. Impulse, you leave a high, correction, and you leave a low. So generally, where do I want to catch my trade? I want to catch my trade on that low. Here is where I want to get it. I don't want to get it here and say, even if it retraces, I'm still in a buy. Why would I want part of my equity to get wasted as I wait for my trade to initially play out than just to wait for the right opportunity and enter where I can get a sniper and right. So most people, they don't know how to do this. Now I will teach you how to do this. So here's what happens. We don't want to work with drawings or art that doesn't actually represent what happens on actual charts. Let's try to keep it a bit realistic here. So maybe let's say I've opened my 24-hour chart, which is my D1, and I see that my trade is, when my strategy is like this now, it means my trade is what? Is selling. What do I do with this chart? Do I just sell? No, don't just sell. Why? Because we have what we call points of interest that we work with. That's why you are able to see sometimes I give you a signal, I give you a buy limit, I tell you it's going to spike out here. If it doesn't, I'll quit Forex and it spikes there. Why? Because it's an area of point of interest. Right. So the part that we are at right now is how do we utilize that? Right. So here in this meeting where people trade using support and resistance, you can go to someone and then they'll tell you support and resistance don't work. I personally don't trade with support and resistance. I'm not saying it doesn't work, but it doesn't work as much as I like, or as per my strategy. They're totally two diverging strategies with what I use. So if I'm to say maybe I'm going to master support and resistance, one day I'll tell you that it works. But just because now I'm not using it, I'll tell you it's a bit tricky. Why? Because when you trade using support and resistance, generally you are not paying attention to structure and direction. To support my point, I'll tell you this. We can have a downtrend, guys. We can have a downtrend and we can have a consolidation. Support and resistance traders will trade here. If I tell someone who trades using support and resistance that this thing is in a sell, that person will tell me this thing is buying and selling. They won't pay particular attention to all this, but they'll pay all their attention to all this. Trading breakouts, yes, it works, but trading breakouts can also mess you up. Why? Because as a trader, when I'm seeing a downtrend, I can have a false breakout, which won't come and break this previous high, but will continue going down. And then people will start screaming there was manipulation, but there's no manipulation. You don't believe in manipulation. I think you've never heard me say anything about manipulation. There's no such thing as manipulation in the market. Is pay how I trade. Why? Because each and every move that happens in the market is calculated. You know, there's nothing that's more interesting than knowing why you are trading, what you are trading, where it's coming from, and where exactly it's going, where it's going to turn, and the point that it's going to respect. Once you start trading like that, money starts coming in automatically. Because when you're just trading just because you want to make money, you will lose. Because that's the only valid reason that you have. You want to make money. But when you treat trading like a game whereby you're asking yourself questions, why is it coming from where it's coming? Why is it going to where it's going? Then everything starts making sense. All right. I think I've wasted much time not telling you how to utilize those points. So we said with structure, this is our structure. We want to catch our trades where we want to catch them here. Why? Because sometimes I might not be able to catch it where it has just started, the overall trend. So what do I do? When we are trading retracements, we have what we call a Fibonacci. And please don't ever make this error. Don't ever make an error of coming to mark your highs and lows using wicks. When you are marking highs and lows, you use the bodies and leave the wicks alone. Wicks just tell you price wanted to get here, but it failed. Right. Generally, that's what wicks tell you. Right. So let me go to the actual chart and share what I mean when I say a fib. Right. Right. So let's do this, guys. In this example that I'm going to be showing you, we see that we have jump 25. Jump 25 is selling from a daily perspective, right? Meaning more of my bias is going to be leaning towards that sell. But I don't sell using the D1 time frame because obviously we have to scale down our entries to M15. But I've already kept it in mind that I have a low here, I have a high here. This is minor structure. I have a low and I have a high. I have a low here and I have a high. Isn't this what I was teaching you? Right. So generally, we have a low, a high, a low, a high, a low, a high, a low. This is what I was teaching you. We are breaking previous lows, breaking previous lows, breaking previous lows. So this low here that we are witnessing, we have to break it. Why? Because generally our bias is in a strong sell sentiment. Okay. Now, if it's me who's trading, guys, this is easy. This is easy. I want you to just listen here. This is the most crucial part. With this part that I'm telling you, you can even use it in M1. You can even use it, I don't know where. So let me zoom in. Right. This is the most crucial part. Yeah, now let's go to the most crucial part. For me, I use what I call a fib. A Fibonacci, as you can see, I've just made a new low. After making this low here, I need a high. After making this low here, I need a high. And now I don't know, where is this high going to be? Is it going to be here? I don't know. Is it going to be here? I don't know. Is it going to be here? I don't know. But do I have a previous high? Yes. Where is it? It's here. Do I have a previous low? Yes. Where is it? It's here. So what do I do in this situation? I take a fib. And then just because I'm going down, I take that fib and go down with it from that high to the low. To the low. Where is the low? The low is here. Right. Now, catch this part, guys. If you go to books, if you go into your baby pips, if you go into your, I don't know, whichever books you read, the Fibonacci, we don't react at 23 or 38, but rather they'll start telling you it reacts at 50. How many books do you know have told you you react with the Fibonacci at 50? There are many. Go to YouTube, it's many. But for me, I choose the 61, the 70, and the 70.5 and the 71 to be precise. So this is my zone where I'm expecting my new high to be made. And my trade will continue going down. Right. So it's supposed to drive here. After it drives there, and then it falls. Is it? right? But someone will ask me, why? Guys, this lesson is going to have a lot of things, but I doubt you are going to finish everything. If you go again to my YouTube channel, you see that I once told you of gaps, of order blocks. I even did the fib, but not as much as I'm doing it right now. At those points of interest, or at these zones, now that we've marked a zone, it automatically becomes our point of interest. We have to have some sort of a factor that also leans towards us saying this zone is strong. And if you check around this zone, we have a gap here. You can see a gap here. There's a gap. If you didn't do the lesson for gaps, kindly go to YouTube. I did a lesson for gaps. I didn't even get stingy with information on that one. It was just as much as I do when I'm mentoring some other students. It's premium stuff. So there is a gap. So this gives me confidence. Now, besides, let me drag you backwards a bit. Besides us just using a gap or an order block, even if you are a support and resistance trader, I want you to make use of this. I just thought about this. This is some important information as well, right? Now, remember, whenever we approach any zone, however the market moves, we have what we, sorry, let me choose a pen. Where's that pen? Where's that pen? Right here. We have highs, lows, highs, lows, highs, lows, highs, lows. This is what I always tell people, especially some other guys that I just randomly meet up with, maybe in town or anyway, and they just say analyze a trade. I think if some of you are here in this group, I always tell you, how is your structure moving? We find a point of interest. Whenever we get to a point of interest, right? Just because we have support and resistance traders, I want you to visualize this. Come rain, come thunder. If you open your chart, it's going to approach your zone with structure like this. And what you want to look for is a break of structure, right? So that you gain confidence that you're moving. BTMM traders will tell you this is an M. Support and resistance traders will tell you there's a double rejection. But I myself, I would say, the reason why I'm going to be selling at my point of interest is because I've seen something that has gossiped to me or something that has given me a hint that, you know what, I'm about to change. So get ready. So how do I know that I'm about to change? I'm having structure, buy, sell with high, low, high, low. Now, many people confuse this. Many people think that this is a breakout structure. No, this is not a breakout structure here. This is generally a change of character. Why? Because the previous low we had is here. That is valid for this high, right? So this is just a change of character. That tells us, you know what, Kuda, I'm about to change. So get ready. And when I actually get to a point of having a breakout structure here, then I can now be confident to say, you know what, I had a change of character, I had a breakout structure. So now I'm going to enter my trade. So if you are going to be trading using a change of character, what you want to do is you enter aggressive trades, but respecting this previous high. Meaning whenever you break your previous high, then your trade is no longer valid. But if you actually go with the flow and everything starts happening the way it's supposed to happen, then you make tons of money. That's why you are even able to sometimes, sorry, I don't want to mislead people. It doesn't happen every time. But that's why sometimes you're even going to see that you can raise $30 to $30, $10 to $200. Why? Because you found a perfect entry point, utilized it, and knew that my trade is never going to go back there, and it played out. Right. I know some of the stuff that I'm saying, maybe I'm rushing a bit, but if you just take time to revisit our YouTube channel, it would make sense. So let me come here. I want to choose boom. Some people say, but you trade boom and you're doing volatility. Let me choose any boom for you. Let me choose boom. Which boom should we choose? Or crash? 5,000. All right. Now, this is my demo, so don't be confused. I usually like doing this analysis and actually tell you exactly what will happen. Now, here's the thing, guys. I want you to see this. We're having lows and highs. This is an uptrend, as you can see. Lows and highs. This is a low, right? And we have a high here, and this is the low to that high here. And we have another high, and we have another low, right? But I want you to see something of great importance. This is not a low, right? This here, some person may say, this is a low. This is not a low. This low, I'm saying it's not a low because it didn't break this high here, which is my valid high for now, right? Here. So what you'd see is that something that you think looks like a low here. When it was broken, we had what you call a change of character. This is not a breakout structure. And the actual breakout structure happened here. Here is where the actual breakout structure happened. And after that breakout structure, what happened? It melted. It melted. Even if you tried coming back, it didn't break here. It melted even furthermore. And then up to where it is. I remember I gave you this signal. When I gave you this signal, I think we caught it around this area here. The reason why we caught it around this area is because of this order block here. It has a very good sniper entry. It was because of this order block here. Some people now might ask, what is an order block? Okay, allow me to just pass through an order block quickly. An order block is a candlestick. But how do we define it? We don't define it as a candlestick. It's a last sell candlestick before you buy, or a last buy candlestick before you sell. Meaning, if I was selling, if I was buying, let me start with the buy. If I was buying, I can't draw all candlesticks in the market, guys. So forgive me there. Or maybe the best thing I can do is, maybe let me just do this. Let me just do this. Right. Woo! Come on. Where are you? I'm looking for something important. I'm looking for something. Where is it? Just a bit, guys. Can you be a bit patient? Just a second. Yo, if I don't show you this, I'll be heartbroken. If I don't show you what I want to show you, I'll be very much heartbroken. Right. Right. I've gotten it. So let me share my other screen. Hey, today I'm going to suffer with many screens. Right. So let's say we're in an uptrend. This is not the candlestick that I want. Right. Is it this one? No, it's not this one. Sorry. Post treat. Right. So let's say we are in an uptrend. Right. and we change to a downtrend, there's going to be that last candlestick here. Oh, sorry, let me do it again. I don't know what's happening with my mouse here. So we're in an uptrend, right? We're in an uptrend, highs and lows, highs and lows. There's going to be a time whereby we are going to break structure, right? And there's going to be just that one time. Come on. Sorry. Right. Right. My mouse. I think it was my mouse. So we are going to see that we can switch from an uptrend going to a downtrend, but there's going to be that last. This is in the event of that we were buying, now we want to sell. So if we were buying, you're going to see that there's going to be that one last buy that you are going to see before you sell. So here we can see it's somewhere around which point before we started selling, our last buy was somewhere around this point here. Now we mark that whole candlestick, and when we mark it, we now call it an order block. Why? Because it's one of the reasons why we started selling from that point, from that candlestick. That was the last candlestick that we witnessed buying before we sold. So how are you going to use these order blocks? Price is going to come back to that area and then definitely fall. So that's why you see sometimes when we come back to these areas, we just tap and we go crazy. You know, like, oh, it just goes crazy. Our trades, they just start melting. So if you utilize this and if you make a very a great use of this and put it to your advantage, you're going to see that you're always going to be winning. You're always going to be having more trades that are going to play out than that are not going to play out. So I'm going to be posting this video on Telegram and YouTube as well, so that you can go study it. And most probably tomorrow we have another session. I'll link all other videos that are related to this that we've done before, so that we work on them. So guys, I hope I shared very important information with you. Our meeting is now left with a minute. I hope I shared very important information with you. Let's go study it, and you give me feedback on the results that is going to be giving you. So yeah, that's it for our lesson today. For everyone who have their own inquiries, my inbox is open. My South African number was banned, so I'm using my Zimbabwean number, which ends with 911. Or you can also catch me on Telegram, just inbox me there. On Instagram, inbox me there. If you have any special requests, or if you have any leads or topics you want us to present on, you tell me. 4 a.m., we're going to be having another Zoom session at 4 a.m. So you set up your alarms for 4 a.m. This is what I'm doing with my mentorship class every day at 4 a.m. We wake up, we analyze trades. All those trades that I'll be giving you, we would have already analyzed them. So if you really want to check out how I do my real-time analysis, 4 a.m. you set up your alarm, use the same link that I posted, and then we meet at that time. Once again, I love you all, guys, and let's have a good night. Now we're going to be doing our $15 to $100 challenge. I hope someone sleeps with money. Thank you a lot. Have a good night.